Silver has just experienced one of its most dramatic drops of the year, a move that shook both traders and long-term investors. But as sharp as this fall has been, some of the most respected voices in the market believe it could be setting the stage for something bigger. In this video, we'll go through exactly what analysts, traders, and market researchers are saying about the recent silver sell-off. Let's begin with what Rashad Hajiev shared about silver's recent price action. From October 17th, during 3 trading days, silver fell from $54.50 to $47.50, or 13%. Today, only silver fell 5%. Overall, from recent top to present price level, silver fell over 15%. I think this decline is good enough to cause material damage and pain for late buyers, which suggests that the bottom could be very close. A steep, fast decline, over 15% in just days, tends to flush out speculative positions and test the conviction of traders. Rashad's words highlight something important. When markets inflict pain for late buyers, it often signals the exhaustion phase of a correction. This kind of fall can reset sentiment, remove weak hands, and potentially prepare the ground for the next rally. Market technician Northstar added this perspective. Gold and silver. Maybe this would be just a little too perfect, so maybe the correction doesn't end up being quite as deep as $3,000 and $35. I hope it is, though. He's pointing to the idea that many traders expect textbook moves, clean Fibonacci retracements, or even numbers like $35 silver, but markets rarely reward that level of predictability. Northstar is essentially saying the correction could end earlier than many expect. If that's true, then the current pullback might be less about doom and more about building a new foundation. Next, a strong fundamental reminder came from Gold Silver HQ. Solar needs silver. Silver is already in deficit, demand greater than supply, and it's only going to get worse. That's a powerful point. Silver isn't just a store of value, it's a critical industrial metal. The solar energy industry alone consumes a massive portion of global silver output each year, and with clean energy expansion, demand continues to outpace supply. So while short-term price drops grab headlines, the long-term picture remains deeply bullish because physical supply simply isn't keeping up. The next major update comes by Bai Xiaojun, who shared crucial data about the physical market. October 27th, the market data. The silver vault of SGE experienced a significant outflow last week, falling below 1,000 T1st. SHFE continues to see outflows of silver vaults. The silver inventories both exchanges hit record low. This is significant. When both the Shanghai Gold Exchange and the Shanghai Futures Exchange show silver inventories falling below 1,000 tons, it's a major signal that physical metal is leaving the system. That means demand inside China, one of the world's biggest silver consumers, remains very strong. These aren't just paper trades, this is real silver flowing out of vaults. Another strong comment came from Silver Degen, who wrote, "Backwardation is almost over for silver. I am so looking forward to seeing the inventory LBMA will report at the end of this month. The bullion banks managed to save the skin this time, but the Fed is about to cut rates again and provide gasoline for a silver squeeze round 2. Backwardation, when spot prices trade higher than futures, often signals tightness in physical supply. And when that condition begins to fade, it can mean traders are bracing for a shift." Silver Degen also mentions the Federal Reserve potentially cutting interest rates. If that happens, lower yields could weaken the dollar and once again drive capital toward precious metals. Silver squeeze round 2 isn't just a catchy phrase, it's a reminder that the same dynamics that fueled past silver rallies may be setting up again.
Rashad shared another key insight about the long-term setup. Gold to silver ratio, GTS, is screaming for a long-anticipated breakdown. If gold goes to 5K and GTS to 2016 and 2021 lows around 60, then silver could soar to $80 plus in a very short period of time. The gold to silver ratio, or GSR, shows how many ounces of silver it takes to buy 1 ounce of gold. When that ratio drops, silver outperforms gold. If gold were to climb toward $5,000 and the ratio reverted to its 2016 or 2021 lows, silver could indeed surge toward $80. Historically, these ratio compressions mark some of silver's biggest bull runs. From Bullion Star, we got a vital context update. Silver lease rates moderating 35% to 5%. For context, rates spent decades near zero, so 5% still indicates some supply tightness compared to historical norms. The worst of the spike has passed, but wholesale premiums, mint allocations, refinery constraints equals still present. That paints a clear picture. Yes, lease rates have come down from panic levels, but they're still far above historical norms. Supply remains constrained, mints are still rationing allocations, and refiners are behind schedule. So, while the immediate stress may be cooling, the market isn't back to normal. The Great Martis offer a broader long-term view. Pending and depending, if silver follows gold, a backtest of the channel break is likely. Nevertheless, silver, as gold, has decades to rise. Hope this helps. This reflects the big picture technical outlook. Silver could still retest lower support levels, a normal backtest after a breakout, but the trend remains intact. His line, "Silver as gold has decades to rise," captures the essence of long-term conviction. Technical analyst Patrick Karim shared a realistic short-term outlook. Silver. Odds of a melt-up are diminishing, at least not before the next correction resolves bullishly. That's an honest assessment. The odds of an immediate explosive move are lower, but he believes once this correction phase finishes, silver could resume its upward path. Consolidation before continuation, that's how markets usually move. Now, let's look at what Ole S. Henson observed about the London spot market. Silver remains on the defensive as post-Diwali liquidity in the London spot market continues to improve, pushing spot prices back below futures, a normal structure that reflects funding and storage costs. Key support, based on Fibonacci retracement, is seen at $47.40, followed by $45.35. This is a critical technical breakdown. Improved liquidity means the market is stabilizing after the festival season, and the structure between spot and futures is normalizing. But those support levels, $47.40 and $45.35, are essential to hold. If silver stays above them, it could mark the area where the next recovery phase begins. Finally, Eric Yoon shared a strong indicator of real demand. Another 2 metric tons of physical silver is withdrawn by a Chinese PMS bullion distributor from the Shanghai Gold Exchange vault. So, physical silver is flowing in China. This Chinese distributor is selling these silver SGE slabs at 15 kilograms, 482 troy ounces each. They will probably sell out fast. That's not a small amount, 2 metric tons withdrawn in a single move. Physical silver continues to leave Chinese vaults at an accelerating pace. When demand stays strong during a correction, it tells us that industrial and investor appetite remains alive and well. So what do all these perspectives tell us? Silver has just fallen hard, more than 15% from its highs, and that's shaken confidence. But behind the price action, we're seeing record low inventories, steady outflows from major vaults, strong industrial demand, and a possible easing from central banks that could reignite metals momentum. The surface looks volatile. The foundation looks strong. Corrections like this are painful, but as history shows, they often create the setups for the next powerful move. Silver's decline may not be the end of the story. It might be the reset before something much larger. With global demand tightening, the Fed potentially cutting rates, and long-term charts hinting at strength, the next major move could surprise everyone. Disclaimer: this video is for informational and educational purposes only. It does not provide financial advice, recommendations, or guidance. Always do your own research and consult licensed professionals before making financial decisions. Stay tuned for more deep dive updates as we continue tracking the gold and silver markets around the world.